Good afternoon from Los Angeles. It's Alyssa Corum and Ed Carson reporting to you live from our newsroom. And on today's show, we're going to be talking about a FANG stock breakout, as well as a sector look from software to chips to medicals. A lot of action today.
Absolutely.
But first, let's take a look at the major indexes. We did finish down slightly across the board. The Nasdaq and Dow down just a hair. The S&P 500 down about 0.2%, but the Nasdaq 100 relatively strong today, finishing the day with a gain of about 0.3%.
Yeah, the Nasdaq 100 is the 100 biggest non-financial stocks in the Nasdaq. That's basically your big techs. I mean,
right.
Apple, that was a big winner today. Google, which we'll talk about, and some other of those big names that actually hit a record high, pulled back well off of those highs. It was a really weird day underneath. I mean, if you look at the close, you say the index is what? No big deal. I mean, the small cap Russell 2000 was weak. A lot of sector rotation. Chips were strong. Medicals were terrible. Software and other growth names were weak. Rails are strong. Big sector and group moves. So that was a little bit, some of the moves were concerning, but we are hitting, basically at new highs. It's not surprising to see some resistance, but
right.
A lot of wild action beneath some, what you would see like dull index move.
Yeah, and we'll get into further detail into the different sector moves we saw today in a bit. But first, let's take a look at Google. Breakout today for the stock, finishing the day up about 0.7% here. Comes relatively closely on the heels to a breakout from Apple, out of a cup with handle base, but there are a lot of flaws with this chart pattern, even though Google parent Alphabet is technically in a buy range.
Yeah, and as you pointed out in another story in a video earlier today, and you can watch that in more detail, but Google's, if you look at its relative strength line, that's the blue line there, that's actually not even at a high for the handle, which means it's been lagging the last 3 weeks or so. I mean, just not great. You want to see it at least hitting a new short-term high. So that's not great. It wasn't that big of a price move. The volume was below average.
Right.
I mean, it wasn't great. It just wasn't very, it's not negative. It was actually helping the markets, and one reason why the Nasdaq 100 did well today, but still, just like Alibaba, not great action.
Yeah, exactly. And that relative strength line measures price performance versus the S&P 500. So if we were able to see that even at a short-term high, that would have been positive. But our research shows that stocks that hit a new high for the RS line as they're breaking out, that often is a precursor to big gains.
I mean, you want to buy
key indicator.
Yeah, you want to buy the very best stocks. I mean, it's like, this is a good stock.
Yeah.
But I mean, it may not be a real big leader in this rally. That's what the stock is showing so far.
That's right. If it's just keeping pace with the market, then you might as well buy an ETF. And we're going to be talking about ETFs in this show. So moving on, let's take a look at a software ETF, IGV. Software stocks, it's kind of reminding me of what happened a couple weeks ago. A lot of software stocks making big runs this year, but pulling back, maybe some profit taking. Is that perhaps what we're seeing again today?
Yeah, there might have been some of that. We don't know. I mean, because there wasn't really any news. This is a big reason why the IBD 50 Innovator IBD 50 ETF was down, but the IGV down fairly sharply today. We've had a number of these big volume days. I mean, these are high growth, high valuation stocks, so you see that.
Right.
The ETF doesn't look too bad. Some names were hit more than others. Some recent breakouts having a little bit of trouble. I mean, it's just something going on here. It's something to watch because we've had a lot of those days. It has bounced back, though.
Right, exactly. So that's what we'll have to keep an eye out for, some of those individual names. So we saw this ETF drop about 1.1% today, but for those individual names, if that means a pullback to the 50-day line after a breakout, that could potentially turn into a buying opportunity if we see a rebound, like you mentioned.
Absolutely, but then sometimes it's scary to buy it on that because you don't know it. You want to see it rebound off of that. Hopefully in strong volume, because don't just buy it when it's coming down because you don't know if it's going to stop there.
Exactly. That is a very key thing to note. And now we want to pivot our attention to the chip sector, which in the headlines today, Apple, Qualcomm, also Intel rising in the Dow today. So let's take a look at this VanEck Vector Semiconductor ETF, which is SMH. And this is something that you have mentioned, hammering home, but it's important to see chip stocks participate in the market rally.
Yeah, I mean, chips are in everything. I mean, it's in your toasters now, but I mean, it's in cars, it's in smartphones, it's in servers, so it's in everything. So to see them leading is really strong. I mean, the last couple of days, you've seen Qualcomm really surge on. They reached a deal on royalties with Apple. That was a big deal for them.
Yeah, multi-year legal battle.
A huge customer on that, but it's also Intel basically last night said, okay, we're giving up on modem chips. And they'd spent years, decades trying to get in the wireless market and the market like that. And so those are a couple big names. Those were big winners today, but the sector has been doing well beyond that. And so weren't any really stocks to buy off of this right now, but obviously it's a sector to watch, doing quite well right now.
Exactly. We saw a new high for the SMH, I think, yesterday, and now it's extending its gains today. So that's another thing that's great about looking at ETFs is it puts in perspective how the sector is doing.
Absolutely.
And last but not least, speaking of how sectors are doing, I want to take a look at a medical ETF, the Healthcare Select Sector Spider ETF, which is XLV. And this group did not have a good day today, to say the least.
Yeah, it has not had a very good week at all. I mean, yesterday, United Health CEO, after earnings, said that was really expressed concern about what Medicare for All proposals might do to the healthcare industry, and HMO, health insurers sold off, hospitals sold off, biotechs have sold off, medical products have sold off. But you actually, if you look at the RS line, that had been selling off basically all year long. I mean, it had been weak already for various reasons. The relative strength line on this ETF and I think a biotech ETF are hitting 6-year lows. So you would have been better off buying the S&P 500, back in early 2013, rather than buying this much more volatile sector.
Yeah. So. Exactly. Yeah, when you look at that period from about, February to early April, so about a 2-month period, even though it was moving sideways, you can see that relative strength line trending lower. So that, if you're just looking at this and saying, oh, well, it's turning down, we'll look at it compared to the price action of the ETF.
And this day certainly shows how much sector action matters for individual stocks. Yes, the market is the overarching thing, but man, I mean, the chips are rising, the software is down, healthcare is getting crushed. There's a reason why that happens, and individual names, a few will buck the trend, but it's hard to.
Exactly. So how to turn these lessons into action? Well, it's important to focus on the top groups. So we look at 33 sectors, but we also look at 197 industry groups. So investors should be focusing on those top 40 to 50 groups.
Yeah, and I think medical is the top 10, 15 worst groups. I mean, that last time I checked, just an obliteration today. But yeah, absolutely looking at the top stocks and the top groups.
All right. Thank you so much for watching, everyone. And we hope you visit investors.com for all the latest stock news and analysis. And you can also catch our content across social media, whether that's on Facebook, Instagram, YouTube, or Twitter. And we also have a podcast episode, another episode that's dropping tomorrow. So make sure you go to investors.com/podcast for all the details on how to subscribe on your favorite listening platform of choice. We're going to be talking about earnings gaps this week.
Oh, that'll be good. That'll be very good.
Earnings season upon us once again. All right, everyone. Thanks for watching, and we'll see you back here tomorrow.